More so than ever before, people are living paycheck to paycheck. No savings, nothing for a rainy day. With interest rates near historic lows, some have simply invested instead of saving. There can be no solution to this crisis except for mass bankruptcies to occur. Look around the West, US, Canada, UK, Australia, and the rest. Everyone extends themselves to the absolute maximum, and that's totally fine, as long as nothing with their income or their expenses changes. Nothing to worry about, right? You came here for the truth, so let me unveil that for you. We are going to have this very important discussion today about debt. I'm going to look at several articles, give you several facts. I want you to know how bad the situation is. But as I mentioned just a moment ago, as long as people continue to get paid what they're getting paid and their expenses stay exactly where they are, it can continue forever. They max out their credit cards, they max out their home equity line of credit, they push it to the absolute max. But if everything stays the way it is, they can go on with life. However, something changes. They get let go. They get reduced hours. Suddenly their expenses increase because of interest rates, perhaps. Maybe it's because the bills start to rise. I don't know about you, but my expenses constantly go up. Electricity goes up. Gas potentially could go up, or other types of energy. Maybe it's gas for your home, for example. Maybe you're looking at electricity. It could be from anywhere. Expenses in general are rising, and that goes for anywhere in the world. So we see this at a time in which we're being told that prosperity is at a newfound high. This cannot be true because look around, the economy is booming and so on. But let's get to the details that nobody is willing to admit in the mainstream. Why do a few weeks without pay turn into a crisis for many families? Simple. Nearly 80% of Americans live paycheck to paycheck. That's a problem when you have little to no savings. Now, this, of course, I showed you it before. 80% living paycheck to paycheck is a sample size. All of these surveys, you cannot survey everybody in the United States in this example. You have to get a survey, and they might stretch you one way or the other, but take it in a more conservative approach and put the number at what you want. But from what I know specifically, and this is really the theme of what we'll discuss today, the issue is this. Somebody's making $40,000 a year and they live very modestly and they have certain expenses. Then they get a raise or they get a new job and now they're earning $60,000, $80,000 a year. Suddenly, what do? Well, now I can afford to buy a new home. So I move into a new home. I even put a down payment on that home. But what happens? My expenses rise. But that's okay because so has my income. So it's affordable. But if something breaks that, whether it's I lose my job, whether it's expenses increase, then we have a problem. So this is the fact, no matter at what income level the person is at, they usually go to the absolute maximum. And this is what I have found with people that I have spoken to personally in my life and just dealing with individuals over the years, helping them deal with their issues. So I know exactly what's happening here, but again, it's a sample size. I haven't spoken to everybody, but this happens to be a repeating pattern. The problem is terrifyingly pervasive. According to Go Banking Rates, only 21% of Americans have more than $10,000 in savings, with nearly 60% having less than $1,000 in savings. So you've got this issue here where people, they don't save money in the bank or perhaps even in cash. Well, I don't know the details of exactly what this means. What if they're putting their money into a money market type fund? Is that considered savings? Probably not. They're not really looking at that. I assume they're talking about bank accounts. So the numbers obviously are skewed in one direction. However, this just shows us that people are not doing the traditional way to save up money. Now that could be good, could be bad. The problem is that it's more liquid to have cash in bills or cash in the bank than it is to have in, let's say, a stock or even some sort of fund. It's because you can't necessarily get your money out that day? You might have to wait 1 trading day, 2 trading days to get your money. What if it, because of something happening during that month where you needed the money, the stock had dropped and you're thinking to yourself, well, now's not the right time. Maybe I should just wait until next week. And so, yes, you have access to the money, but it's not necessarily as liquid as you would want it because the value had dropped. Even though maybe it had come up 20%, now it came down 10%, you're still up, but you feel like perhaps, this isn't really the best time to sell. And that's really what happens here. Investments obviously are much more volatile. With a savings account, at least I'm losing value every single year, but it happens to be more steady. That's besides the point. I just wanted to note the fact that we have a significant change here in individuals and their savings. Let's look first at how many Americans say they have been affected by the shutdown. Obviously talking about the government shutdown, which is probably going to happen again. We'll see. However, 21% said that they had been personally affected by the cutback in government services or programs caused by the shutdown. 28% said the partial government shutdown had impacted them and their family a lot, 8%, or some, 20%. 10% said the shutdown had caused them and their family severe hardship, and 20% moderate hardship. Now you think about that for a second. It was down for just a couple weeks. And also the fact that you shouldn't be relying on the government services in some way. You need to make your own source of income regardless, even if you're employed by one of these individual companies or part of the public sector. You need to have an alternate source of income. It's just a fact. You need something on the side for these types of events. They're always going to happen. There's always going to be a reason why you're not able to produce an income from your primary source at any given time. That's why it's so important to diversify. Many people are just waiting on the fact that their income is always going to be there, and that's a big mistake, especially when nobody today, or primarily everybody, is not self-reliant in terms of their food production and so on. Hey, you got to eat. You have to pay your bills. Even without an unexpected expense, the Federal Reserve reported that 1 in 5, 22%, can't cover all of their current month's bills, and 1 in 4 skipped a medical treatment in the past year due to the inability to pay. Now that's some extreme statistics. This is coming directly from the Federal Reserve. They do this survey every so often, and this is what they found. I mean, we are finding some very, very damning statistics here. This is the level of debt that people are at. And you could make the excuse again, people are invested, they have their Robinhood account with the 7 shares of Amazon in it. I get you, I understand, but that's not cash at hand. That's not liquid. That's not what people need to pay their bills when they come up. Yes, you can sell it, but like I said, things happen, right? You want to be able to have some sort of backup plan, and that doesn't mean that all your savings should be in your bank account. I don't agree with that either, but you either need to have a consistent source of income other than your primary source, or you need to have some sort of backup plan B or what have you, because things do happen. A survey of 4,000 people aged 18 to 30 shows that 51% of young women and 45% of young men regularly use credit to stretch their finances until payday. This is talking about the UK, by the way. The report also found that a quarter of young people are constantly in debt. You have to think about this for a second. Half of men and women in the UK, 18 to 30, use their credit cards or some other form of debt to stretch their finances until they get paid. We're talking about people that get paid every 2 weeks and they can't make the money last until the end, so they use their credit card to buy whatever it is. Maybe it's something necessary, maybe it's something that's not necessary. I don't know. I'm not here to judge them. I'm looking at the statistics and I'm finding that this is pervasive. Look around. Canada, US, UK, Australia, so on. You're seeing it everywhere. When asked how young people made their cash last at the end of the month, 1 in 5 said that they used their overdraft, and a similar number borrowed from family. Now, I'm going to show you some stats looking into further into the overdraft. I think it's a problem, and we'll discuss that more in a second. I'd like to just continue with this. The next most popular form was credit cards, of course. 1 in 10 said they used a payday loan company, although for parents aged under 30, this number increased to 1 in 4. Okay, that's basically the sum of it. I mean, it's pretty bad as far as you ask me. They've come up with these new forms of debt. Look at this, overdraft line of credit. So people right now, they incur a lot of fees when they go into overdraft. So if you get hit with a whole bunch of these different payments that you couldn't make, then you get hit with these overdraft charges over and over and over again, and that happens to compound. So somebody could be paying, let's say $100. They use the example here. Well, that's a problem, obviously, if somebody is always doing this. If it was just a one-time thing, everybody can accept it. But if it's happening month after month, this is a problem. So now they've created this overdraft line of credit where you basically can reduce your payments overall on the late fees that you incur when you go into overdraft. But my point is that why is this even happening? Why are so many people going into their overdraft on a consistent basis that you actually have to create a new product called an overdraft line of credit? We have a very sad scenario today, and these type of people here, as far as I'm concerned, are probably not the ones who are investing in 7 shares of Amazon. They're probably not doing that. So this to me shows us how bad the situation is, but it looks oh so peachy, oh so rosy when you see it where, hey, everything is just fine, right? Because this person here, they're paying their overdraft fees, they're paying off their line of credit. It doesn't really look so good when you focus down in on it, but from far away, nobody can tell because they have a car, they're going to Starbucks, they're buying their clothing at the store, they are there in the restaurants, in the movie theaters, and they're spending. Yes, they're spending over 18% interest, but that doesn't matter because it's the economy, and the economy is everything here. Don't worry, it's totally fine. Doesn't matter that it's being paid with a completely fraudulent scheme that is the absurd level of interest that's being charged on them. It's okay because apparently it can be sustained for eternity. Walmart Nation. Walmart is the largest private employer in 21 states. I just found this to be interesting here. Now, I just wanted to give people an idea and really just use this as a way for me to introduce the topic to you. Today, we have a lot of people who are highly educated, and unfortunately, they don't have a job that corresponds. I just talked about it in the previous video. I won't rant on too much about it, but essentially, we have too many people that are getting paid a wage that is very low in comparison to their expenses, and that tends to be the problem. They might have gone to university, college for several years. They end up with a whole bunch of debt. Pile on top of that the credit card debt, and you find these type of people are in that situation. They didn't get what they were hoping for, and unfortunately, they are getting low wages, can't pay the bills, and of course, that's a cascading effect that occurs. It's not just a problem with individuals, of course, it's hurting companies as well. Payless is preparing for its second trip to bankruptcy court with a plan that could drastically shrink the size of the discount shoe chain. This is now, I believe, the second time in a short period where they're doing this. I don't know how this company still exists, but anyway, here we are, and this is part of all of the different retailers that are failing. Take a look at this list. Since 2016, 35 retail chains have filed for Chapter 11 relief, reporting more than $100 million in liabilities on their bankruptcy petitions. If you look through this list, I know it's probably very small on your screen, but I'll just name a few. Sears, Mattress Firm, Nine West, Toys R Us, True Religion, Payless, Radio Shack, Sports Authority, and so much more. Okay, so there's a lot in here, and they have the liabilities on the right hand side. It gives you the dates as well. I just found it to be interesting and very relevant, so I wanted to show that to you. And then there's this, I'm just going to touch on it very quickly. This one here is going to kick my butt. Farm Belt bankruptcies are soaring. It's an article out of the Wall Street Journal. And basically what we can see today is that mass amounts of bankruptcies are occurring on an individual, on a national level, on a corporate level. And so you're seeing it also with the farms. They're being essentially completely destroyed by this agribusiness that has been created, where all the small and mid-sized farms are being wiped out, and instead what we have are these multinational conglomerates that are just eating up everything, buying businesses left, right, and center, and it's displacing all of the jobs that maybe they weren't prestigious, maybe they weren't fantastic, but it was a living wage. That is changed today, unfortunately. So anyway, that's all for this video. If you found it informative, please give me a thumbs up. I tried to jam as much much data into these videos as I possibly can. It's very difficult to get all this information together, put it into a package. It takes me, several hours to put together a 10-minute video. I don't know where we're at right now. I usually rant on, but anyway, I really work hard to put these together, and the way you can support me is by giving me a thumbs up. It's pretty simple. If you just click that like button, it supports me. I also want to extend my thank you, and I don't do so enough, but the people who donate to me through either Patreon or PayPal, I am, eternally grateful to all these people who give financially as well. Whenever I receive some sort of donation, I always thank that person. I send them a personal email just to say thank you to them. So it's something that I always, I think about every single day. There's no doubt about that. So I'm going to end the video there. Thank you to everybody. If you want the financial education that was not taught to you in school, these 2 books have everything that you need, from the foundation, the history, the asset classes, how to make money, and so much more. And you can take a look through the pages for yourself at Amazon. Just click in the link below. And if you want the audiobook, you can get that at themoneygps.com.